Okay, good morning, everyone. It is Thursday, June 2nd, and we're having this flurry to the downside. I have an overall bullish bias. Overall means like intermediate term, but that doesn't mean immediately. Obviously, immediately the trend is down. This will set up an interesting situation as we head into the cash open. This is straight down. This is no doubt some sort of economic report, some utterance by somebody perceived as important by the market participants. So, you know, right now, I think this will make for an interesting opening. And I don't, you know, I would be reluctant to take a trade here personally. I don't think you can go long here because it would violate at least my personal rules about fading an obvious trend in all time frames, well, at least in the daytime frame. So we'll just sit back and see what happens at the cash open. Michael, do you hear me? This is Tom. It's 9:20. Okay, Michael, you're new. Let me explain how the live room works. I don't run a stream of consciousness commentary all day long, like you and everyone else that's honest. Most of the time, I'm either flat or in a trade and watching. There are certain times of day where things are more important than others. I don't sit here and try to make comments throughout the noise of the day. Everything that I do say during the day, in case you miss something, is recorded. Every single thing I say is recorded. And I send that recording out to all members each night, so you can go back and you can see my thoughts ahead of what the market was doing. And then you can see if I was right or wrong. I try to point out ideas about trading during the day. I try to point out the obvious trend during the day when there is an obvious trend. And my primary goal in here is not to make people money. That's not my primary goal. My primary goal is, number one, to keep people from doing stupid things and losing money. And number two, to educate people on how to develop their trade plan that meets their level of experience, their level of understanding, and their goals. Okay, it's 9:32. Market just opened, cash market. The level to keep an eye on now is yesterday's cash lows, which is around 40.71. So let's just mark that. It looks like we're heading straight to there. And here it is right here. It's too early. It's really too early to get a good read on Brett. Brett, just for the record, is positive at the moment. You know, that only a fraction of all the stocks are open now, so you can't really lean on that one way or the other. Okay, it's still really early, but breadth is sloping higher, and I'm favoring longs. I'd be nervous if we take out this low by much, because we're making lower lows and lower highs. Okay, now the level you want to see strength above is right here. If you're biased to the long side, if you're biased to the short side, then you can sell it here against this level. I'm just sharing with you, I have a bullish bias. I'm favoring longs at the moment. And what I want to see strength above this level. I don't want to see this taken out by much. Now, a tick or two, as illustrated in real time, was it yesterday, the day before, maybe both, I don't remember. You can't use 1, 2, 3 tick stops. You just get picked off. You want to trade market condition, you want to trade market structure, but you have to stay out of the noise when you do that. By the way, I hope you guys, let me give the time here. It's 9:48 a.m. Eastern time. I apologize for having to cancel today's scheduled webinar. We'll do it next Wednesday. If you have already registered, you don't have to re-register. I have a high school graduation tomorrow, and I have family in town, and I just basically overscheduled myself. So I do apologize for that. But the good news is I've already started working on it. So it'll give me a chance to, really add to the material. So if you have any ideas, and the genesis of this webinar was an email from one of you guys, Thiago, as a matter of fact, sent me some really, really good questions about what we're going to cover. So, I'm very receptive to ideas of things that you would like to see and you would like to have covered in more detail. You can shoot me an email, you can post it in the chat. I'm happy, more than happy, to cover and do member webinars on things that you guys feel is important or you feel you need clarification on. Anything auction market related, trade related, any of the stuff that we cover in here, I'm happy to expound on all these ideas. Okay, this balance area is a tradable structure, up or down. Again, I'm biased to the upside, but something has to give here. We have divergences among the indices all over the place. Breadth is neutral. It's sort of trendless. It's plus 70 at the moment. To me, the trend of the day is still up for grabs. Again, I'm biased to the upside, so I'm only going to be trading this from the long side. But it's a legitimate trade if you want to short it below today's session low. It's going to work quickly or not. Probably pretty much same for the upside. But you have the NQ hovering near its highs for the day, and you have the ES down here in a balance area. That's a situation that has to be resolved one way or the other. The spread between the two is unusually high, at least in the short term on an intraday basis. Okay, breadth is sloping higher. Buying most definitely came in. Again, I'm biased to the long side of this market. This is an area where we could get some pushback. This is a rather broad area in here. So, depending on your trade plan, all the things that I always say, this would be an area to say, okay, thank you very much, and take some partial profit, and or just tighten your stops. Okay, it's 10:18 a.m. Now, here's another lesson in context. If you look on the daily chart, which you all should be looking at a daily chart, have a daily chart up, you will notice something that is very, very important. And that is today's session range is quite small. It's going to expand. Now, what does that mean? Well, it means if you are in a trade and you have a bias, maybe you let that trade work. Now, at this point also, today's low and today's high, cash highs, are particularly important because you don't want to be fading those areas. So I'd be nervous now if this market were to turn around and take out today's session low. Breadth is positive at the moment. It's not ripping, but it had quite the bounce off the early lows. It got down to negative 200. But this is where the whole context thing comes into play, and there are different contexts. And in the context of the fact that it's early in the day, we have a narrow daily range session working, means that there is a lot of potential today above or below today's cash session highs. Okay, it's 10:33 and we are on Mr. Toad's wild ride for Thursday so far. And one thing I'll point out that I pointed out yesterday is this idea about when a market trades to new lows, when a market looks like it might be trading lower and then it can't. And that's what we had here, and that's what we had here so far. So this is that battle, that two-sided trade. We had the false break. And if you took this trade, pat yourself on the back. It was a good trade to take. Even if you took a small loss or you got stopped out at break even, it's about consistency and objectivity and taking trades that have an edge. That's a trade that had an edge. So don't beat yourself up if you lost a little money or you broke even or whatever. It's about being consistent over time. Now, I still have a bullish bias. Breadth is making higher highs and higher lows. I'm looking on a 5-minute chart here, going back into yesterday. Today's session range is still narrow. There's a lot of potential above today's high or below today's low. Trading is only easy on Twitter. Okay, 11:07 a.m. Eastern. Breadth is at its high for the day as the ES is making a new high for the day, as is the NQ. The Dow is lagging a bit. The Russell is also on it near its high for the day. So net positive. I think you have to be favoring longs. And today has been so far a really interesting day. This is typical trading, and it's sometimes it's these little things that make a difference, like this idea in here when the market is going to lower lows and it's a narrow range day and it's early in the day. What happens or what doesn't happen is very important. It's auction market information. Sellers were not able to take control of this market below these lows. And these lows continued to be rejected. And then finally, we have this rip through whatever this algorithmic nonsense was here. I'm well, Tyler. Let me save you some time. I'm 68 years old. I have bought and sold probably more cars in my life than you have. I am in the market for a car, but I'm sort of a numbers guy and I'm sort of a facts guy. So if you have a car that you think is similar in to what we look for initially, what I'd like to do, I'd like to see the pictures of it. I'd like to see the price of it, and I'd like to see an inspection report. And if you have those things and you can send them to me, if I'm interested, I'll let you know. But you're doing a good job. I understand what your job is, but you're otherwise you're just wasting your time with me, because I'm going to buy something that I see that I like, but there's nothing you can sell me that doesn't, that I'm going to bite on, unless it's specifically what I'm looking for. And I'm just being candid with you, and I appreciate your efforts, and I think you're doing a great job. But I'm just being honest with you. No, I'm really interested in Lexus or something like that. I don't have, I stay away from domestically built automobiles generally. Now I know Lexus, a lot of them built in the US, but different standards. So we're really looking for a Lexus, but I'm serious. I mean, we're in the market for a car, but I know what I want, and it's going to be based entirely on math. That's what I do. I use math in my business, and that's how I pretty much evaluate everything. So if you find something and you can send me pictures, send me an inspection report, mileage, all that stuff, that would be great. Well, I said something, between 17 and 23, say, just as a guideline. Uh, and so, I want something that, Lexus tend to have long lives. So the absolute mileage doesn't necessarily scare me. The lower the mileage, the better, obviously. But listen, I got to run, bud. But that's pretty much what I'm looking for. You can text me. I don't answer my phone because I'm busy during the day. So the text is the best way to get me. Okay. I don't recall. You can resend it and I'll look at it. Okay. All right. Thank you, sir. Yeah. Bye bye. Okay, it's 11:15 and we are back into this area. This is an inflection point. If we blow through here, you're looking at 4170 or higher. Today's been a real interesting case study in intraday trading. It really has. If you are long, and you can't be short. you're either flat or you're long. Now, if you are long, this is, let's back to context. It's 11:15. There's a lot of day left. We still have a narrow range day working. So there's a lot of potential for this trade, but you're going to have to give it room to breathe, because it's not likely that we're going to rip higher at this rate of change. So this is where it comes down to your trade plan, your statistics of your trades, which you all should have. And that can help you manage things. But there's nothing wrong here. If you're in from down there, anywhere from around that 4,000 level, or what is it, 4080 level, take something off. You probably have a chance to put it back on. Now, again, there's a lot of potential for this trade. So any long trade that you're in here, you do not want to be stopped out on. I would not want to see at this point, if we're going to have a ripping up day, I wouldn't want to see the market trade below about 40.95. That's, roughly halfway back into this range. But if you're trying to position this thing, that might be, you might have to give it that much room. Okay, it is 11:48 a.m. Eastern time. This is pretty classic stuff, guys. It's really fun when these concepts really play out. Now, they don't always play out the way you like, but if you're consistent in looking for these things, there is a huge reward over time. So we had this situation down here at this low, and that has been discussed earlier this week. We had a similar situation yesterday at the lows, where the market could not trade lower. The lower lows were abruptly bought sharply. And then we rip higher through this nonsensical algorithmic induced range, which is exactly what this was. We came up into this level that had been identified as you might have some pushback, did get the pushback. Now we're ripping higher. Now, the only thing, there's nothing between here where we are right now and about 4170 or so. Let me scrunch this up. So your next area is way up here. Now, there's a jobs report out tomorrow, for what it's worth. Right now you're long or you're flat. There's no great edge at the moment. But, as I have said before, if I had to take a trade right now, it would be long. It would not be short. But if you're not in this, there is no edge at the moment, in my mind. Your potential return is here. You probably have to risk about that, be willing to risk about that much. That's 1-to-1. That's up to you. So this is a trade that is interesting. Breadth is plus 1,200 at the moment. That's very good. That's, this is starting to, this is a change in market condition from what we have seen since the beginning of the year. We had tremendous momentum last week, and now you're seeing what typically happens following huge price momentum, as well as internal expansion, as well as momentum as measured by internal expansion. You had the advanced decline line show extraordinary readings, some of which had not been seen in years. And so, what we've had since that, up to that point, since the January high, we've had the big fail following breadth expansion. Well, we had several days of very strong breadth last week, which itself was something different from the beginning of the year. And now we've had some digestion, which is normal. Now we're having, looks like an attempt to trade up into this 4170 area, and then above there you have the highs from last Friday. So we'll see what happens today. And that's about it for now. Some really good stuff in the chat today. I can't tell you how much I appreciate it when you guys ask questions or post ideas or post comments in the chat. You know, a lot of you guys that have been around for a long time, I want to know what you're thinking, and it helps me, and it will help other people as well. I miss stuff all the time. You know, we can have a much more robust room of more value to all of us when we have participation. You know, I understand if you're new, you're not sure what's going on, but a lot of you guys, you know, can probably know what I'm going to say before I say it. So if I'm missing something, you go ahead and say it. So I'll check back in a few minutes. Greg, are you there? Okay. All right, you ask a good question. Let me read your question. What is the best way to map out a positive expectancy on your chart? I turn my fib tool into a way to measure 2-3 times risk. That's good. I have no idea where the trade is going. Also, what is a reasonable reward to risk for an intraday trader? Couple of things here. Don't confuse. A positive expectancy is more than just one trade. A positive expectancy is a result of, the sum of the result of a statistically valid number of trades. What you want to identify are trade setups that have an edge. Now, an edge doesn't mean every single trade works, but an edge, if it is a true edge, leads to a positive expectancy. Now, in terms of what is a good reward to risk trade, anything, if you can identify a trade setup that consistently gives you 2-to-1 reward to risk, that's incredible. But like today, you know, you could have taken a trade in here, depending on where you took the trade, where you had 4, 5, or to be determined 10-to-1 reward to risk. You know, you want to identify trade setups that have an edge, and that's almost always your best edges occur at extremes. Now, an extreme can be a previous day's high, previous day's low, these key reference areas, etc. You know, so there's no one answer to that. You know, I will take trades that have 1-to-1 reward to risk. Now, you may say, well, you say not to do that. Well, yes, I do, but I'm not taking trades that risking 1 to make 1. I'm taking trades to risk maybe 10 to make 10, but they work 65% of the time. That's a trade with a positive expectancy. So the expectancy equation is 2 parts. It's the reward to risk of the trade, and it's the probability of the trade. And I sort of think that's what, you know, to refer back to Dominic's post earlier, where he said, you know, he likes to trade at extremes, and most of his trades, you know, he has a couple trades a month that really make it work, that really make his account. Most of the time, the trades are small losers, small winners, break evens. But he's taking trades that have an enormous reward to risk. So, you know, there are different ways to get to positive expectancy. The ideal way, and the way to stay out of trouble, and this is where to start, okay, is to trade at extremes and then look for that series of higher highs, higher lows, lower highs off of that extreme and take the trade. Okay, it's 12:26 p.m. Eastern time, and we continue to have a very robust day to the upside. Now, we're still not, there's no extraordinary range here, by the way. So there's still potential to the upside. I don't think we'll continue higher at this rate of change. You're either flat or you're long or you're patient and you wait and see if something develops this afternoon that you can get in. I am about to go out. I'll be back. I'll be out for a couple of hours. I'll let you know when I am back. Okay, it's 2:50 p.m. Eastern time. I'm back just in time to see this upper area being reached. Now, if you're, if you're long, you protect long. So if you're a day trader, how you manage this trade depends on all these variables that go into the individuality of an individual's trade plan. Your account size, your experience, the number of contracts you trade, a number of variables. One size does not fit all in this thing. There are certain things I can tell you not to do, but if you get in a good trade and you get a good run, you got to sort of know what you're looking for and what you're going to do. Now, we're into an area where it would be surprising, frankly, if we didn't get some sort of pushback in here. And then it gets choppy into this spike high, this Globex high back on the 30th. The rate of change today has been quite extraordinary to the upside. It would be unusual to see this market continue straight up into 4 o'clock, but it can happen. The more likely thing here, other than a big downdraft at this point, is that we get into a chop fest. So the easy money has already been made today, in my opinion. If you're not in this, sitting it out is an option. The immediate level to the downside now will be right in here. This area was tested several times. Breadth is very, very friendly at the moment. So that's where we stand as we come into the last 70 minutes of the cash trade. Okay, it's about 3:23 p.m. Eastern time. And let's go up in time frame for a few minutes. Let's get rid of all this stuff and just start this over. Now, there are a couple possibilities here. We could just go ripping higher, but it wouldn't be a big shock to see some sort of balance area form between, say, here and here either. So that's a real possibility. Breadth, as I'm speaking, is making new highs for the day. You don't want to be shorting this rally intraday. I'm just trying to think about where we are in that larger degree time frame of development. Now, again, momentum is so strong, it's sort of going to have to stop on a dime in here, but we do have that jobs report tomorrow at 8:30, so you have to be alert for that. Okay, you can see we're getting pushed back in here in this area. Let me scrunch this up. Here you go, right in here. So, yeah, that's pretty predictable, frankly. Now, and this, it happened right on that last surge in breadth. So your levels to the downside, this will be one here, and then this area right in here if we get below there. I mean, this is about as vertical as it gets in this time frame. So, I said this earlier, chopping around in here into the close wouldn't be a big shock. Okay, let's take a look at things. Cash market has closed, and we had, this is a rather unusual day. It's the proverbial trend day in legacy market profile parlance. I encourage you all to go back and listen to this tonight from the beginning. A lot of lessons in this, a lot of lessons. Let's take a look at where we may be from a larger degree perspective. So we'll go to the daily charts. And I put this in the report this past weekend. Hold on one second, please. Okay, let's look. Now, I pointed this out. The rally that began at the end of February at this spike low carried, and this is the futures contract. It's going to be a little bit different than cash, but exact same concept applies. And I show the cash. Put the cash charts in the report this weekend. So this is about a 13% rally. If we reach this level here, that's a clear key reference area. Everybody and their brother is watching this. It's not like it's unique. If we reach this level, we're going to be right at symmetry with this rally off of this low back in February. Now, what does that mean? Nothing necessarily. It's just an interesting observation. And it's also coinciding with that very, very important level. Why is this an important level? Well, it's an important level because, as you can see, the market traded here, and then it could not get above this level. And it tested it on several different occasions, and then eventually traded sharply below. We formed this low, now we're bouncing up in here. So what this is, it's incorrect to call it resistance. Now, it might be resistance, but what it is a very important inflection point from an auction market perspective. So what that means is when we trade up in this area, now, sooner rather than later, you're going to get a very sharp move away from this, but time is a relative thing. And on a daily chart, if we balance up there for 3 or 4 days, that's still soon. But I expect a very sharp move away from this area. I'm not suggesting this is the top of a bear market rally or any of that stuff. Even if it is a top of relative significance, relative to what has occurred since the rally began off of this low, it could carry down to here. Who knows? But this is going to be the next area to really keep an eye on. Now, it's possible we don't get there. It's possible this thing stops on a dime. We have the jobs report tomorrow. And another possibility is we form balance between here and here. So we're going to find out. The jobs report comes out at 8:30 tomorrow morning. Breadth is going out on its highs, plus 1,600 and change. That's net positive. Still not as strong as it was the other day, but these divergences in bull trends can persist. But if we get up in here, we're going to have an interesting situation to assess. Now, I would expect to see this level as long as we don't close below yesterday's session lows in all of the indices. Breadth is beginning to, on some intermediate term stuff, start to get a little toasty, but there's room there. And extreme can always, you know, once again, extreme is one of those relative terms. We can get more extreme. So guys, I hope you had a good day. Have a wonderful evening, and we'll pick it up again in the morning.